Elon Musk says 3 significant improvements to FSD will roll out roughly every 2 weeks. Should be really shining bright by late April or early May. The Tesla team is making a lot of progress with FSD right now, and that progress is not going to slow down, it seems. AJ thinks this means the potential and/or capabilities of FSD will be glaringly obvious to everyone by then. And this is generally good news for the EV industry. Shell is to unload 1,000 gas stations and pivot to EV charging. We are upgrading our retail network with expanded electric vehicle charging and convenience offers in response to changing customer needs. Some people are talking about the slowing EV transition, but looking at what's happening here, yeah, the transition is not stopping. Tesla just hired a semiconductor manufacturing expert to help with battery production. Tesla has been looking at the semiconductor industry as an influence on its own manufacturing effort, and Elon Musk said that Tesla looks to replicate the accuracy and scale of the semiconductor business in the battery and EV manufacturing world, and now it's hiring this person with a lot of experience in that industry. The company is also looking at its factory layouts as a computer chip, looking to optimize every aspect and utilize as much space as possible. Therefore, it makes sense for Tesla to do this. This new hire has 30 years of experience in the semiconductor industry. This was a really good exchange. This Dojo Dead asked James, how will Tesla ever compete with Nvidia, both on performance and cost? And do they even need to, since they are already buying Nvidia GPUs? I think it's dead. But then why would Tesla invest $500 million into building a new Dojo facility if it was dead? Why do they keep building Solar Roof while it is effectively dead? This is a pet project that likely never goes anywhere. But then Sawyer shares this post, to which James says that does sound promising. Ernesto is a certified Tesla installer, and he shared some interesting details about the costs of the solar roofs deployed by Tesla. It depends on many variables, but the new gen solar roof reduced its components by 7x. We are installing our first with a new system in 2 weeks with PW3. We want to be around $45 to $50 per square foot. Tesla solar roof costs have to come down for the roofs to be deployed in big scale. Here are Tesla sales in daily reporting countries in Europe. Q1 is currently trailing behind the past 3 quarters in the daily reporting countries. The drag is coming from Model Y being offset partially by pretty strong Model 3 sales. These countries represent roughly about 1 in 4 Tesla sold in Europe. The deliveries from China also just came out. The number is 12,000, and year-to-date China numbers are 3.9% down versus 2023. Considering that there are quite a few discounts right now and incentives available for people to take deliveries in China, James thinks Q1 is looking pretty soft, and his last forecast of 430,000 he thinks is likely going to be too high. The quarter is now trending towards 420,000 deliveries. I do expect a lot more noise as analysts realize that they have to reduce their delivery estimates. That will put more pressure on Tesla stock to go down in the short term. And if you do remember, Tesla started offering inventory discounts on Model Y vehicles with hardware free in China. So we could see configurator price cuts in China as well. In the meantime, Farzad says he just had his best drive ever on FSD V12.3 in Austin, Texas. And AJ responded to this comment from someone, meanwhile, sales are shrinking for Tesla. He takes us back to 2007. iPod sales are shrinking. Quick, let me sell my Apple stock in 2007. It's July 2022. Nvidia's earnings dropped 59% quarter over quarter, and next quarter outlook is poor. So quickly, let's sell all of our Nvidia stock as well. Now, to be fair, the stock first did go down pretty substantially, but then it did go up a lot. This news, I think, is actually really bad for the legacy automakers in the long term, and for Tesla, therefore, it's actually good news. The US Energy Department on Tuesday, today, will unveil final rules that will significantly soften its proposal that would have electric vehicles EV mileage ratings to meet government fuel economy requirements in 2027. The decision is a win, supposedly, for the Detroit 3 automakers and the United Auto Workers Union that raised alarm that the proposal could have resulted in U.S. automakers facing $10.5 billion fine through 2032 for not meeting fuel economy requirements. So basically what's happening is these legacy automakers will be able to continue producing gasoline-powered vehicles, and they don't have to make as many EVs as previously they thought they would have to avoid these penalties, which in the long term, I think is actually going to hurt them, because that's where the future is. If you are not a part of the future, if you resist the future will eventually destroy you. So these automakers, in the meantime, they will actually make some money, but they will let Tesla run and they will not focus on EVs as much. So it's actually good news for Tesla, because the next generation vehicle is not coming this year, obviously, and them not being focused on EVs means less competition for Tesla over here.